Hello and welcome to the Investor Master Series. My name is James Boyd. Alongside with me is Barbara Armstrong. We welcome her and we welcome all of you. Frank, Don, Sunita, Sandy, Ocean Life, Wiley, Luke, Lena, Jax, and also Dom and John and Bill. Hello, good morning to you. Now just real quick, today's date, April 22nd. And just a quick reminder, you could follow Barb on X and myself on X. Just always remember that our first names are capitalized, the first letter. Last name is also, the first letter is capitalized, CS. If someone reaches out to you and talks to you about or asks you something, we don't reach out, okay? So you know it's not us, okay? So this is just a quick reminder. Capital J, capital B, or capital B, capital A for Barbara Armstrong, CS. Follow us there. We do post educational content there and also announcements as well. Now, just real quick as we get started, this class is called really the Investor Master Series because we talk about stocks, we talk about fundamental analysis, technical analysis, option strategies. It's really meant to be a webcast where we could be maybe more intermediate to advanced, really kind of talk about things in a bigger scope and maybe also with some deeper depth. Now, if we do from time to time talk about options, remember that options carry a high level of risk and are not suitable for all investors. Also remember the information here is provided for general informational purposes only. And also remember that Schwab does not recommend the use of technical analysis as a sole means of research. Other types of analysis are fundamental analysis, macro, intermarket analysis. So do not think that if I just look at the market through technical analysis by itself, that is how all other investors see it, okay? And by the way, it's kind of exciting to kind of see other types of analysis that could complement your technical analysis. Now, also, we will be using the Paid Money software application for educational purposes only. Feel free to use that software, web-based version. Practice on the Paid Money account. Learn about different strategies. See if it's actually something you would consider for yourself. Investing involves risk, including loss of principal. Past performance, no guarantee of future results. And also, when we talk about short options or cash-secured puts or selling calls, like covered calls, those can be assigned at any time up to the expiration, regardless of the in-the-money amount. The options that we talk about in our class are American style options, where those that could happen prior to expiration, okay? So that's kind of just understand what the risk is there and the pros and the cons. Now, also quick reminder, you can go to schwab.com/events, 3 upcoming events. Denver, May 2nd and 3rd, first day technical analysis, second day option strategies. And also in Anaheim, the AOS is the Advanced Concept Workshop or Advanced Options. And interesting material there covering advanced options, but also some other type of strategies as well. That's May 30th and 31st in Anaheim. You do not have to be living in that area to go there. You might say, I'm going to be in that area for whatever reason or travel to that. You can join us. If you're a Schwab client, you can go to schwab.com/events and see other places that we're going to be throughout the end of the year. And we will also have a one-day event in Miami called a Market Drive. And that's June 13th. And that's a one-day event. So we have different types of events and different type of formats. Join us live. Check that out. Now, just real quick, we're going to talk about market conditions. I want to kind of talk about how 2025 has shaped up to be so far, and I want to kind of relate it to kind of different years, okay? I think it's pretty interesting. Also want to kind of talk about some stocks that might be correlated to maybe an asset class, perhaps, and we're going to talk about one of those and stocks that's correlated to an asset class that's getting a little move. We're going to talk about strategies and also a little bit in terms of implied volatility. And then we're going to talk about how do we demonstrate these strategies using the trading platform. We're going to be using the margin account and the IRA as well. Now, before I actually go there, some of you might be wondering, James, can I, for example, let me pull this up. Can I where can I actually see this class on a recording? Okay. Well, we post our classes, most of them, on YouTube. You can go right to youtube.com. You could just search for Trading Talks Schwab Coaching Webcast, and you'll see our page that looks just like this. If you have not subscribed already, don't know why you wouldn't, what you're going to notice is you can just click on subscribe, probably right there in the middle of the page. Now, I want to kind of point you to something that is important. You're going to see that down below we have playlist. Playlist is like different classes, okay? Think of it as different TV series of content, okay? Playlist. You can also, for example, go to this little icon right here and you say, look, I want to learn something about vertical spreads, or I want to learn something about covered calls. That little icon, that little magnifying glass allows you to search for content in this YouTube page, okay, on our channel. And the other one that we want to also introduce is if we go to shorts. Now, many of you know what shorts are. Usually they're about 90-second clips about maybe certain nuggets of information. Well, if you just click on right on shorts, you're going to see that we have some new ones that we actually just posted as of late. So make sure that when you go to the Trader Talks Schwab Coaching Webcast page, don't forget to kind of use the shorts, the playlist, and also the magnifying glass to search for the content that you might have some interest in. Check it out. Now, let's go to just real quick the market, and I'm just going to pull up SPX just briefly. Now, if we take a look at this, we know that we've been, let's kind of start with just real quick the VIX, okay? Let's just start here, okay? Now, look, we have enough experience to know that if you have VIX at 30, you probably are having the market fluctuate about 2% low to high on a daily basis, okay? If we look at where the VIX is right now, we're sitting here at 30, okay? In the last couple of days, we've actually been seeing the VIX kind of come up a little bit, okay? And yesterday got to about 35. Again, more fluctuation. More fluctuation usually means prices on many stocks are under pressure or maybe even falling, okay? Now, today, the VIX down about 3, down about 10%, and I know some of you bulls out there are saying, James, I want more to the downside. That investor says. Understand. Okay, know exactly how you feel. And many of you want to kind of see this shorter term moving average that went green yesterday to fail and this to actually take out that prior low. So if you're a bull fan, you want to see the VIX close down below 29 and make a lower low. Now, if we saw that on the VIX, then this is probably what the S&P is probably trying to get a bottom. Trying to, okay? Now, we've been actually looking at these lines, and I'm going to take off this white line. I'm going to take off this white line, and I'm going to take off that one. Just look at the fibs for just a moment, okay? Now, remember, we said we were trying to get above 54.18, couldn't get there. Tried to have 5,300 be the first support level, didn't hold. Tried to actually have the secondary support level hold, didn't hold, closed down below there yesterday, but today we're trying to get back above it. So I'm not really sure if we could really say that the support level is concrete, literally, okay? I mean, it's trying to kind of consolidate, but so far it's kind of, I'm going to say the word neutral at best. Neutral at best. And there's definitely some fluctuation in here, okay? Now, this is kind of important because if you see more fluctuation, some investors might kind of choose strategies. If they were using options, they might say, I'm going to choose some more strategies that maybe are not as sensitive to direction. Or in other words, just kind of have lower delta. They also might focus on strategies that might be more positive time decay, especially if this kind of continues, okay? Now, does that mean that's for everyone? No, but that's what some investors might be thinking. Lower delta strategies, positive time decay. And also picking strikes that are actually more forgiving or lower deltas. Now, I want to kind of speak to just real quick, the NASDAQ. Is it much different? Pretty much at the same level, okay? Now, the one thing we do see on the NASDAQ is we're trying to get back above where we fell down from that 20-period moving average. Many bulls didn't like to see that, trying to put up a fight. Again, let's just kind of say it's neutral at best. Does anyone disagree? Okay. Now, I want to kind of show you something. I don't normally do this, but I saw some information and I looked at it myself and kind of double checked things. And I want to kind of just talk about just real quick, super quick, the S&P 500. Now, if we kind of said, hey, let's kind of start with 2025 to begin with, just real quick, and I'm going to punch these numbers in fast. So far for the year, in the first 74 trading days, the S&P is down 12.3%. This is in the first 74 trading days. Now, obviously, we don't know where it's going to be from today until year end. And obviously, if we don't know that, we don't know what the year percent is going to be. Don't know. But so far, we're down 12.3%-ish in the first 74 trading days. Are you with me? Now, let's kind of provide some context, okay? Now, if I kind of actually went back and said, okay, 1932. Now, what was 1932? Can anybody tell me firsthand experience of what was 1932? Now, in 1932, we actually had the market down 25.7%. The year end, from day 75 until the year end, it bounced up 14.8%. 14.8%. And for the year, it was actually down 14. It was down, I think it was down about, double check that, about 10.8% or so, somewhere right around there, okay? Now, if we take a look at, let's say, 1939, can anyone tell me firsthand experience what happened then? Down 17%, okay? And what you're going to notice is it bounced up, okay? So it bounced up about 13.5%, and for the year, it was still down about 5%. So first thing, what you're going to notice is 1932, 1939, we're coming out of the jaws of the Depression, okay? Which many of us probably don't have firsthand experience. So the first couple days of that, first 74, it was ugly. It bounced back up, but what you're going to see is it kind of got closer to par-ish, but still underwater. Now, let me kind of give you a little bit more context. 2020, okay? 2020, we were down 11%, okay? And it bounced up 30%. I'll just give you round to the nearest percent. And then what you're going to see is year end, it was up 16, okay? Now, that was kind of interesting that it actually, 19, excuse me. And so it's kind of interesting, kind of big struggle in early part of 2020, COVID. 1942, does anyone have any firsthand experience? Down to 14%? And I'll just put the year end so we can actually get to the point. 12.12% at the end of the year is positive. What you're going to see is in 1941, okay? That's negative. 1941, down 9%, 9.8%. Ended off the year, it was down 17.9%. Down. We're talking about in the teeth of World War II, okay? Now, the other years here is 2009, 2008. So the moral of the story is these were also down 9%, about 8% here in 2009, down 7%. The only year that was really ugly, 2008, when Lehman Brothers collapsed, it was down 38%. 2009, actually, you bounced back, and it was up 23.5%. So the reason why I kind of bring this up is here we are in 2005, and the point I want to make to this and why I went through this exercise to kind of give you some general ideas as far as statistical numbers is it's been historical. I mean, you're talking about 2005 statistical numbers to a depression, to World War II, okay, to a financial crisis and so on. Now, the takeaway I would kind of think from this is what have you learned from markets that have been under stress? Okay? What have you learned from markets that have been under stress? Now, second question, what have you learned and how have you handled equity markets that have been under stress? How have you learned to handle it or adjust strategies? Have you learned about allocation, position sizing, stop losses, changing strategies, and so on? Third question, what have you also learned about asset classes? Now, I know there's a lot of people that think that, James, stocks, that's the only asset class because that's all I'm investing in. Rude awakening. That's not the only asset class. Stocks can be fragile, especially when there's market stress, whether it's coming from monetary policy, fiscal policy, or geopolitics. Okay? That's all I'm going to say about that. Stress can come from those three main areas or just economic in general. Now, the first thing we need to understand is stocks are not just domestic, meaning US, they could also be international. We have had a front row seat to hey, markets investors don't just look at domestic markets. Now, the last 15 years, that hasn't been the case. But really what we've kind of been seeing is a reigniting of international markets. Maybe it's time to wake up and realize that all investors do not just invest in the United States of America. Now, that doesn't mean that the USA is bad, but sometimes when the USA is struggling, they might go to other areas, okay? So that's first. So stocks are not just domestic. Second thing I really want to point out here is commodities. Rude awakening here. If people, for example, when stocks go down, we know that, for example, it doesn't mean that everything goes down. The money flows somewhere. Things like gold, okay? Silver, okay? I'm going to include copper, etc. We have had a front row seat to that shiny metal, that shiny rock that has actually been going to the upside. Gold. Copper, by the way, firing back to the upside after a big steep sell-off. Keep an eye on that. Now remember, if stocks are under pressure, that doesn't mean everything's under pressure, okay? Gold doesn't look like it's been under pressure. It looks like it's been crashing to the upside, okay? So that's a big lesson. Do not fixate, or you could if you wanted to, feel free. But I'm just saying, be aware that if stocks are not in, if they're not in season, if you will, or maybe there's a high demand for the stocks, don't think that there's not a bull market somewhere. Now, the third thing I want to bring up is cash. So when we talk about cash, this is where the investor might say, hey, James, I got stopped out of some positions, or I didn't like what was economically happening, and I decided I was going to have a higher percent in cash. Cash is an asset class. It's a position, okay? So I'm going to segment that from fixed income. When I say fixed income, what we're really talking about here, I'm just going to use one example, is T-bills, okay? Now, I'm going to separate cash and fixed income, because when you think about fixed income, you think bonds, okay? And when I'm talking about cash, I'm talking about maybe the investor is just sitting in cash and just maybe trying to actually have something that's more liquid and not at a longer maturity. Now, the other one that we actually have to bring in kind of this is real estate, okay? Or something that's correlated to real estate. And the last one I'm going to say is really, we've had a front row lesson to foreign currency. That US peso, dollar, has been under severe pressure, and we've seen money float away to the yen, to the Swiss franc, to the pound. Can I get a euro? Can I get a Canadian dollar? Okay. And so the one thing I want you to kind of be thinking about this is, when we look at let's say the stock market, you have to understand if the stock market is, let's say, not that bullish, are these other areas bullish of commodities? What type of commodities? Are some investors having a higher percentage allocated to cash? Are they using fixed income products? Okay. Are they maybe looking at things that are correlated to real estate perhaps? And are they maybe changing, let's say, out of the US dollar and going to foreign currencies and investing in international markets? Now, these things, if we go back to this, I want to show you this. If you said, where can I actually learn more about this? Go to schwab.com, go right to where it says learn, go right to where it says courses. Each one of these asset classes has unique rewards and risk. You should look at the disclosures of each one of those and realize there's risk to each one of them that are unique to the asset class. If you went to courses and you said, look, this first course, Simple Steps for a Retirement Portfolio, click on that. And if you click on that and just scroll down to building a portfolio, you'll see more about these different asset classes right in step 3. You said, James, I'll be honest, all I focus on stocks. I would push back on that and say, stocks are not the only investment in town. We have these online courses so you can learn really about other types of investments. What are the potential rewards and risk with that? Be aware of that. Now, I think this is, when we go back to this, I want to kind of now talk about the portfolio, okay, for just a second, okay? So when we look at this portfolio, the margin account there, okay, we talk about the IRA account here. I want us to kind of just take a look at something for just a second, okay? Now, we've talked about in the last week or two, like about short selling stock and the risk with that, okay? If someone short sells stock, that is truly a bearish position on the stock. Okay, fine. You can also have a long and short bias. What do you mean by that? Well, when the markets are more volatile, When we look at, I'm on the monitor tab and I'm looking at the position statement. It just states the positions. Anything that has a positive delta is a bullish position. AM is bullish. All is bullish. Now, when you look at Caterpillar, what is that? Well, Caterpillar has a negative delta. Is that a bullish position or bearish position? It's a bearish position. Bullish position, CRM, bearish position. Bullish position, bullish position, bearish position. Bull, 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 bull. Now, a lot of us, for example, might have more of a bullish bias. Maybe on some, the investor might say, James, I have a few bearish positions, but I have a lot more bullish positions than bearish positions. I think this is probably more representative of many of the investors out there. Not all, but I think a lot more investors, they tend to own things, they own them, than they actually are maybe bearish, okay? So in our portfolios, we can be long biased, thinking they could go up, but also short biased as well. So on this portfolio, on the IRA, we only have 3 bearish positions. And if you went to, let's say, the margin account, okay, that we looked at that one and said, well, how many bearish positions do we have? Bearish positions, IBM and Lowe's. We only have 2 bearish positions, okay? So that's the first thing I want you to understand is these portfolios are not all long only. But notice when we actually talk about, let's say, the bearish positions that have negative delta, there's not 10 positions. There's still more bullish positions in the portfolios, and that's risk if the market were to go down. But what you're also going to notice is the portfolios have positive deltas, okay? There's positive deltas in the portfolio. And what does that really mean? Well, it means if the market were to go down, that this portfolio would be at risk of the market declining. If the portfolio went up, it could potentially, should benefit if the market were to increase and these stocks were correlated currently to the market. That's very important. So a lot of times when people think that when market falls, the portfolio is completely bearish if we do 1 or 2 or 3 bearish positions. That is not true, okay? Any questions on that? Now, James, what we have not said is, James, is it possible that if we did covered calls, protected puts, or married puts, or collars, is that a way to be defensive in terms of the portfolios as well? Yes. Or position? Yes. Okay? We've talked about that. Now, what I want to do is also take a look at some stocks. Now, did anyone see anything unusual when you looked at anything that was tracking price this morning? It's the F word. Did anyone see anything that looked unusual that might be starting to break out a little bit? Anything. Okay, now I'm going to pull up a stock that might be correlated to that perhaps asset class. Okay, MSTR. Okay, now if I looked at MSTR, so some companies, now we know that like a company, like an individual, they have cash. Some companies just have the cash sitting there, maybe in a business account, checking, savings, the whole 9 yards. Maybe it could be in a treasury, a fixed income product. Some companies have even said, we're going to take some of our cash and put it in Bitcoin. Now, I'm not advocating that, but some companies have decided that they are going to put some of their cash in something that's more speculative. Now, there's risk with that, okay? Now, I'm going to go to an example of MSTR. Now, if you go back to MSTR, and if we were to look at this, I'm just going to kind of circle some of these most recent highs. Recent highs, okay, recent highs, and recent highs. All right, so there we go. Now, what are we going to do from there? Well, I'm just going to kind of go back and kind of say, well, anything unusual? Well, if we were going to kind of connect this from the high to the high to the high to the high, and then take this to the right-hand side, kind of getting a little breakout to the upside. Bottom, multiple touches right at 243 and change, and you got earnings coming up. Now, we know that with earnings coming up, the volatility is probably pretty high. Now, some people might say, hey, I'm going to do a long call. Well, if you buy a long call, okay, and the volatility were to rise, it's positive vega. The call options could rise with the volatility going up. Positive vega. Now, second part is some investors might say, James, I don't know what the stock is going to do over earnings. And this is where the investor might decide, am I going to hold over the earnings or not hold over the earnings? Okay. Let's say we decided in this example for the paper trade that we're going to try to hold over earnings unless we make a certain percent, like 50 or 65% prior to the earnings. Now, let's say the investor said, James, I don't know what the earnings is going to be. I want to kind of be a little bit more conservative. And so when we think about more conservative, we would think about language like defined risk, built-in maximum loss, lower delta, and so on. Those are kind of words that kind of give us more context to lower potential risk, okay? Now, what I'm going to do is I'm going to go to the trade tab, and I'm going to bring up on the paid money account, I'm going to type in MSTR, okay? Now, if I look at MSTR, what you're now going to notice is, and I'm going to bring this up, and by the way, I'm going to go to just real quick. So if we looked at the option table, we went to the trade tab, there it is, and we see that we look at the options with 3 days remaining, 97. And then we go out until about, let's say this June 20th of June, the implied volatility goes to 98 and then goes into July. And what you're going to see is in the back half of the year, that volatility really is high. Higher volatility doesn't necessarily mean better. It means greater forecasted range of movement up or down, percentage-wise and price-wise. Now, what I'm going to do is I'm going to go to the 16th May. And what I'm going to do is I'm going to go look and kind of just double check the liquidity for just a moment. Now, when we talk about liquidity, we're looking at the bid-ask spread first off, okay? But we're also looking at, let's say, the open interest, okay? The open interest is the number of contracts that are open and unexercised. The volume is today. How many contracts are bought or contracts that are sold? They are not netted off, okay? So if the investor buys 10 contracts, that'd be 10. If the investor sells 10 contracts, that would be 20. They're not netted off. It's just looking at the activity, okay? Now, if you take a look at this, what we're going to show is if the investor were to say, James, I'm going to sell the 320, okay? And let's say that investor decided, why are we picking that one? We're trying to get something that has an active market for it. 2,100 contracts on the 320. Now, remember, the delta is kind of showing, it's trying to theoretically give you an idea that if the stock went up or down $1, approximately how much would the option move by for the first dollar? Theoretically, given the bid-ask spread stays where it is, 32 cents. And that's very important what I just said. If the stock moves up $1, you might say, we made $32. That depends upon the spread. If the market becomes more and more volatile, spreads tend to widen out. So that's very important to understand. The reason why I use theoretical is we don't know where those spreads are going to be and how liquid the market is going to be, okay? Now, what I'm going to do is I'm going to right-click on the 320, sell, and what I'm going to do is going to go to vertical. Sell 320, and then buy the put below. Now, which put are we going to buy? We're going to buy the put that has 18 total contracts, or we're going to buy the put that has 767 contracts, open and unexercised. We're going to show the example of the 320, 315, where there is more liquidity. Liquidity today doesn't mean liquidity in the future, okay? Now, if I went and did this, and I'm going to do this in both accounts, if I went to, let's say, look at this on a one contract basis, it's going to give us the 320, 315 short put vertical. That right there is the credit received, which is also the maximum profit given the vertical. Second, the max loss, spread of $5 less the 180, it's going to give us a max loss of 320. Now, the nice thing about this is we can go down to where it says single count, multiple counts. And what I'm going to do is I'm going to do one of these in the margin, -1 for a short put vertical. And I'm going to do 2 of these in the IRA. Now, so we're spreading out 3 total contracts. There it is. And now what you're going to see is the max profit is adjusted for 3 contracts, and so has the potential max loss given the vertical, okay? Now, what we're going to do is go ahead and send that order and see if that position were to fill. Okay. Now, what I'm going to do is whenever you trade in both accounts, what it's going to notice is at the very top, it'll say total accounts. It's showing the whole umbrella of the whole of the two portfolios, the margin and the IRA. So that's kind of just a quick thing that happens. If you send trades in both accounts and you say, wait, I went back to the monitor tab and my balances look different. It's taking all of your, it's taking both of your, in this case, for ours, paper money portfolio, class examples, it's taking both portfolios, okay? So that's kind of one trade that I want to look at just first off. Now, and the reason why I kind of bring that up is MicroStrategy has been correlated recently with Bitcoin and some companies that have been trying to allocate some of their cash from the company in terms of a speculative asset class, perhaps known as Bitcoin or crypto. Now, here's the deal. Now, some of us might say, I don't agree with that. We're not saying we have to agree with it. Some companies actually do something different than we're actually used to. Let's kind of see how that plays out over time. Now, if I were to ask you a question, okay, what is the trend of Netflix? What would you say? Now, I'm looking at a chart on a 3-year price graph. Now, someone told me one time that how you see trend is your opinion. I mean, you could say that about anything, okay? Now, if we kind of said that we're looking at a 3-year price graph and we went from the lower left to the upper right, I mean, I think we could agree, even if we don't like each other perhaps, okay, or don't always agree, that if we're making, if that line is inclined, I think we could at least agree that it's not a downtrend, okay? Now, if we take a look at where this is, we're at a brand new higher high. Now, I think if we're at a brand new higher high, it's probably not bearish. Can we at least agree on that? And there's always some people that, man, it's just tough to have them agree on anything, okay? And they're always going to try to poke holes in something. But the moral of the story is the trend has been up on a 3-year weekly. You go back to a 1-year graph, 1-year daily, and you look at that same idea. We pull this up and say it's been an uptrend, okay? Now, what the trend has been doesn't mean that that's what it's going to be in the future. We know that. We've hit that like 5 times. Now, the biggest actually thing that's unique about this is we had resistance. Past tense. Resistance at 995. Why'd you say past tense? Because today we poked above it. Now, yesterday we talked about gaps. And we've talked about close higher gaps. We talked about close lower gap downs. Today we gapped to the upside. And it was at 1,005. And it's at 1,059. Now, a lot of times when people see gaps up in price where it closed from and where it gapped up to, the question is always, how do we know what it's going to do in the future? You don't know. If it gaps up, clearly there was some excitement of people who wanted to buy. Now, if they bought that much at the open, that's a question. It's not a statement. Could that continue? Now, if we look at the price pattern on this, what you actually see is kind of this big old W pattern, big W pattern. Now, those are typically known as basing patterns. This also kind of has maybe something that might be a continuation pattern of the long term. Now, I know what someone's thinking. James, this is a big candle, and I'm going to wait for it to pull back. It really kind of goes back to the strategy that you pick. If you picked a long call, and this stock fell down to 1,020, oh man, it's a higher delta strategy. It's more sensitive to direction. Your timing needs to be more precise. However, if the investor said, James, I'm going to maybe consider a vertical perhaps, a lower delta, the timing is important still, but it's not as sensitive. I'm not sensitive. Absolutely not. Okay. Now, someone's going to say, how come we're the only normal ones? I know how you feel. Anyway, a little joke there. Now, what I'm going to do, now here's the deal. Notice that at the very top it says total all accounts. We're going to go right back, and we're just going to use the IRA example given. I'm going to go back to the trade tab for just a second, and I'm going to go look at strikes. Let's just bring it up to 12 for just a minute, and let's just kind of take a look at the liquidity. Now, let's open up the Junes and the Mays. Now, this is kind of very important just because maybe someone might consider using options. doesn't necessarily mean they're always going to have the same expiration on all of their positions. Be careful about that, because if in the next 24 days, if the market was bearish, then all your positions are in the same expiration. Some investors might say, James, I don't really like that. I want to kind of spread out the trades over different expirations and not try to have all the risk at one maturity or expiration. Now, what I'm going to do in this case is I'm going to come down here and let's say the investor says, James, I feel pretty confident. I'm speaking maybe a hypothetical example, okay? Some people can play with this and others it's tough. Now, the biggest thing is if someone said, hey, the 1,000, James, there's liquidity there, but that bid-ask spread is like $1.40 wide. But you got to remember on these bigger dollar stocks, the bid-ask spread is wider. What does that probably mean? These are probably not ones that the investor is going to get in, get out, because they have to overcome a bigger spread. The stock has to move more to overcompensate for that. I'm also going to look at, let's say, open this up for just a moment. If we were to look at these, about 90 cents. If I were to look at, let's say, all strikes, I'm just trying to kind of see where there's liquidity. If I were to look at these and said, what's the biggest one that we can see? Okay, 110, 391. And if we look at that bid-ask spread, that's still, that's about 55 cents. And the one that we saw down there in the Junes, it was wider than that, okay? So when I bring that back up, that was about $1.60 bid-ask spread, okay? Be careful about that. Now, in our example, we're going to sell the 16 May, the monthly option. We're going to sell that, okay? Sell, vertical. And what we're going to do is, if we did, let's say, example, the 1,000, selling it, and then buying the 990, okay? So in this trade, which is only going to be done in the IRA account because of, if we did a $10 wide spread, the max loss would be 738. What we're going to do in this case is just the IRA only. If we wanted to do this in the margin account, we would need to take it down to a $5 wide spread. Okay, now Josh actually says something really, really important. Oh my gosh, increasing the playback speed and listening to JB is really funny. Especially when he says liquidity. Okay, yeah, so there you go. Have a little fun. Someone also did mention that, James, I can't listen to your classes at 2 times the speed because you talk faster to begin with. There you go. Everyone's a little different. So, yeah, pick whatever speed you want. Now, the biggest actually thing, JP, that was funny. Now, here's the deal. Credit, max loss, and what you're now going to see is if we note the cost of the trade including the commission, and what we're going to go ahead and do is send the order. Now, remember something is, I just want to kind of make sure that you understand something. When we talk about spreads, it's a level 2 option clearance, okay? Not everyone is going to be approved for options. There's different levels of option trading. So when we talk about these verticals, it's level 2. So just be aware of that. Now in the paper money account, we don't need levels of clearance. You can just practice paper trading and see if it's something you would even consider. Now, so the second trade we actually did was really Netflix. Now, I want to also go back to a couple stocks that might kind of be showing a little strength. So I want to go back to just real quick Goldman Sachs. Goldman Sachs on the right-hand side, keeping an eye on this, on the right-hand side, kind of showing like an ascending triangle in the short term. That's a key word. And this level that we fell down through, maybe it's not going to hold. What I'm going to do is I'm just going to set an alert right above that line. Right-click on the chart. Create an alert. An alert is not an entry. It's like an alarm clock. It's like a Ring doorbell or whatever it is. Your light turns on in the backyard because it senses something, right? Same idea. Create the alert. If I do that, I'm just saying, look, if GS gets at or above 524.46, where did that number come from? Wherever you right-click on the chart, say create alert, that's the number. Wherever you right-click, that's the number it's showing. Create. Now what you're going to see is it's right there. So we're going to keep an eye on that, and can that reverse up even higher? The other one that's actually been a little bullish, kind of in that same camp, is IBM. This one has earnings coming up shortly. It's kind of right up near that sensitive area of resistance, 248.89. Keep an eye on that. The other one we're going to kind of keep an eye on is Mickey D, the Golden Arches. Now, I don't know if the fish fillet is coming back or that pork McRib sandwich. But if you take a look at this on the Mickey D, now on the daily chart, about the last 6 months, it doesn't really look that interesting by itself. But when you compare it to its sector, when you compare it to its market, SPX example given, it looks a lot stronger. When you back this off to a 3-year weekly chart, this looks stronger than many, many, many stocks. Now, if you take a look at this and zoom in on the right-hand side, you got a big old bullish engulfing candle right near the area of support. This week, we also saw, so far, a lower tail. Now, here we are. It's only Tuesday, okay? But we saw sell-off down to 305, and buyers step in, and so far, the weekly candle ramming it to the top. It's not the weekend so far. But this is another one we're going to kind of keep an eye on. And also, I want to kind of also make mention of, we talked about Coca-Cola. We talked about its counterpart in Europe, okay? I'm looking at the weekly chart of Coca-Cola, okay? And if you look at the weekly chart of Coca-Cola, it kind of shows that same thing that we saw on Mickey D. Large red candle, followed by a bullish engulfing candle, blink back to the upside. The last 2 weeks of Coca-Cola have really been bouncing on the 10-period moving average, bouncing on the 10-period moving average. And if we look at its European counterpart, you're going to see that that has been pushing to the upside. Now, these larger companies, where here in the U.S., where you know their sales are reflected in U.S. dollars, the CCEP, the sales they should be traded in the currency typically that it's actually located at. So if we're talking about Coca-Cola that's in Europe, the sales will be in euros, okay, or wherever they are selling. That's how a lot of these companies could make the determination of what do they want their reported financials to be in. Now, if you take a look at this, what you're going to see is that's kind of been leading the KO example. Now, what I'm going to do here is I just want to kind of speak to any other stocks that might be starting to get a push. Okay, so Coca-Cola is getting a little push. I'm also going to make mention of Costco that's getting a little push. Now, I want to end on this one, okay? Now, if you look at, let's say, Costco, I want to kind of show an example of a stock trade for just a moment, okay? So if the investor said, James, this 989 has been acting like a Berlin Wall of resistance. Now, we know the Berlin Wall doesn't always hold, okay? Sometimes it can eventually break down, okay? And let's say the investor said on this one, look, I want to buy the shares of stock if the stock were going to breach the resistance. So I don't want to buy it now. I want to buy it if it really gets at or above a certain price. Now, what I'm going to do is I'm going to set that buy order, a trigger to buy if we get at or above a certain point, okay? So in the last 2 minutes, we're going to say limit, stop, data GTC. So a buy stop is the opposite of a sell stop. It's just saying buy the shares of stock if it were to get at or above that price. Why would the investor do that? Well, they're thinking if it got to that price or higher, it could potentially be a bullish potential signal. No guarantee that it could go up higher. But if it got to that price, maybe the investor thinks it's not bearish. Now, if we kind of said what might be the potential path of least resistance if it were to do that, well, it's probably right around that 1025 area, okay? Now, I'm not saying that that's the top. I'm just saying that's where some investors might put a target. Now, if the investor says, well, what about a stop underneath? They might say, James, I'm going to set the stop underneath 950 and set a stop underneath there right about 931. Now, let me hold that for just a second, okay? Now, you might have your stop a little different. You might raise up your target a little bit different. But these are kind of some stocks that we're going to keep an eye on. Goldman Sachs, MSTR, Netflix, IBM, Mickey D, KO, CCEP. We would also include on that list Palantir, PLTR. These are examples, not recommendations. So now, why do we talk about some bullish examples? Because we know that some investors are not bearish. They're not going to be, okay? And some investors use volatility to try to get in. And if enough investors get in, it could cause a potential upward trend. Now, I'm out of my time here, but we did 3 examples of bullish trades, 2 option trades, and 2 vertical trades, and 1 stock trade, excuse me. Now, also remember that coming up next, we also have Cameron May teaching our next webcast. Stay tuned for that. We also have Barbara Armstrong that will teach us getting started with technical analysis later on today. And also a quick reminder to join us later today on different webcasts. Barbara, if you could post the calendar for that, that'd be great. And also a quick reminder, you can go to schwab.com/events and see also our in-person events. Go ahead and practice some of these bullish examples, not recommendations, practice them, and that way you could try to become more proficient in strategies that you might consider for yourself. Now remember, with what we discussed, all investing involves risk. Different asset classes have unique risk characteristics. Be aware of that. And also remember that this has been the Class on Investor Master Series. Thanks so much. Stay tuned for Cameron May coming up next. Take care. Bye-bye.